Good morning, everyone. Today I wanted to talk about the pre-trading routine. Right now my time, it's just before 6:30. This would be just before 8:30 Eastern time. And I usually start trading right around 6:30. But I don't start trading till I go through a little pre-trading routine. So the first thing I do is I have a little notebook. It's like a daily planner. So like each day has a day with about 5 lines that you can write on. And so I picked it up this year and I just started just writing down some self-affirming thoughts before I start trading, so that I'm thankful for my ability to focus, my killer instinct on trades, my ability to effortlessly make money when I'm trading. And then I'll point out just my frame of mind. So I have no distractions today. I have no expectations. And I try to say that every day to myself, that I have no expectations, because I shouldn't. I shouldn't expect to come in making money each day, or that my strategies are going to make money every day, because they don't. I trade what the market offers, and if it offers good opportunities, I have a good day. If there's not a lot of opportunity, then I don't. My strategies are not designed to make money every day. We need some movement. And yeah, so I just take what the market offers. So this just gets me in a good frame of mind. I'm not trading at the moment because the next step. So I write this down. At this point, I'll notice any distractions or voices in my mind, or if I'm feeling negative or anything like that. And I'll try to make a few notes about them here and just become aware of them. If there's a lot of voices in my head, I'll have a little negotiation with them to just try to push them off to the side for at least the hour and a half, 2 hours that I'm trading. If I feel really negative, this seems really dumb, but I'll post the video of why I do this. But you just put your arms up in the air and just kind of like pretend you've won something for like a minute. You don't even actually have to think about it, really. Just put your arms up in the air and just kind of like hold them above your head. 2 minutes, all you need, just while you're, kind of getting ready to trade. And I find it helps clear that negative space from my mind. It's not going to like totally get rid of, if you're in a horrible mood, it's probably not going to totally get rid of your bad mood, but it takes the edge off that whatever you're feeling, and it's scientifically proven to give you more confidence, reduce serotonin levels. It just puts you in a better spot to trade. So I don't have to do that every day, but if you're just walking around before you trade, as I fill up my coffee, sometimes if I'm not feeling super great in the morning, I'll just have my hands up for a few minutes. And I know it sounds ridiculous, but try it out, it works. So then the next step is I just have a mini version of my trading plan with hand-drawn pictures and some like little notes on each one, kind of my main points for each strategy. And I'll just refer to this, especially the main patterns I trade. I have about 1, 2, 3, 4, 5, 6 on here, but really there's 3 that occur most often. And so I'll just refer to those. I'll look at my drawing, look at the little notes I have on each one, and I actually read them. Even though I read this every single day, I still go through and I read it, because in 5 minutes when I'm trading and you're in a bit of an elevated state, it's easy to get caught up in what's going on and forget these little tiny details of your strategy. So yeah, just go through, read the notes, make note of any other major points that I've made on this like summary trading plan. Then I'll also go through I have a daily objectives, or just my currency trading objectives. And so in it I have written down what my passion is, why I like trading. It's really important. it seems like, who cares? Just follow your strategy, make some money. But it's a lot easier to do something well when you've defined why you're passionate about it. I see lots of people come into trading just hoping to make a few dollars, and I've never seen anyone like that be able to make consistent money. They might make some for a little while, but then they give it all back. If you define why you're passionate about it and you're doing it simply because you enjoy it for that passion, you're going to be miles ahead of people who are doing it just to try to make a few bucks and then, do something else. Trading's not really something that you want to do that with. So I've defined what my passion about trading is, why I do it, and it shouldn't be just to make a few dollars, because that's probably not going to be a huge driver. And efficiency versus my trading plan, I want to make sure that I'm taking the high quality trades. I don't trade before news, so this is just like a little checklist of things I want to make sure that I'm doing each day. I want to find that calm middle ground, so I do that by taking those notes, jotting those notes down, reviewing my trading plan. I feel calm, I feel assured. I want to go in with no expectations, and I review my trading plan. Then we also want to do a little rehearsal before trading. So just right now, I just close my eyes and I imagine, it only takes about 10 seconds for each trade, I imagine the price forming one of my patterns, seeing my entry point. I get a price bar. Okay, I place my entry, my stop loss, and I just imagine the price running toward my target. So that was my double pump. Then I just imagine a rounded top. The price is moving up. You start to see this weakening. Price moves. The price is still making higher highs. It shifts to making a lower low, lower swing high. I see the price turn lower. I enter short. I put on my stop loss, my target. Watch the price fall into my entry point. And this is not about trying to imagine that you're winning. It's simply about seeing the pattern in your mind as good as you can. It doesn't have to be clear or anything. It's because when we start trading at 6:30, I just got up. Someone else put it better. They said, it's about half an hour before I start to see start to feel like I trade well. And because I've actually seen some price action and started to make some trades. So it's nice to just kind of get yourself into that state as early as possible, where we're starting to see the patterns emerge, play out, and we just see a couple of them in our mind. Then the other strategy I'm going to think about is the snapback. So we just have a strong up move, really quick little pullback, snaps right back up. This usually takes about 10 minutes or so from the point it moves up, starts pulling back, so we have a couple bars down, maybe a few at the bottom, and then one or two back up. We get a couple bars of sideways movement right near the top, and then a nice breakout to the upside. Our entry is right above that little consolidation, and the price runs toward our target. Again, it's not about imagining that we're going to have a huge win or anything like that. It's just to get our mind seeing the price action that we want to see, that we want to wait for. We, of course, will have our position sizing window open. So whatever your starting balance is, you're going to put in here. Whatever, and I don't change this during the day. So just put in whatever your starting balance is. Your risk reward, your stop loss, this is going to change in every one. This is not going to change. I risk 1%. This is not going to change. This one is going to change. How many pips you're risking on each trade. Then of course we check our news. This is why I was waiting. 6:30, we had lots of news out. One last thing is I always put my scale to about 75 pips. That's not always, it's just based on, if you go to matif.net Forex, and then go to Forex volatility, just scroll down to the EURUSD, and we can see it's moving about 70 pips a day. So I will just always put my scale to what the average is at about 70, 75 pips. If this drops down to 50 pips, then I'll maybe drop it down to 50 pips. But I like having it at about 75 because every day I log in and the price looks the same. So when I logged in this morning, it looked like this, which can make it seem like there has been a lot of movement if you're not exactly paying attention to your price scale. So you open up the thing, you jump in, you're like, whoa, there's lots of movement. Put it like this, and all of a sudden you realize, there wasn't a lot of movement. We had moved in a 10 pip range for hours. So we do have a possible double pump here. Sorry, not a possible double pump, a possible snapback. Waiting for the drop back to the low, 2 sideways bars, and then a drop out the bottom. We can already calculate what our stop loss will be. So we can see, I was measuring on MetaTrader, sorry. Got about 4.6 plus a little bit for the spread, maybe a little bit of slippage, so about a 5 pip stop loss. 2.5 to 1 target puts us at, okay, so we're in that trade. I had to adjust my stop loss a tiny bit. So we want to make sure our stop loss is above these levels. If you actually take a trade and it's not, then you'll need to adjust that. So I have a price for 2. Alright, so those are my levels on MetaTrader. So it's a little bit off from 2.5 to 1 because I originally started with a 5 pip stop loss. I moved it up just a few ticks so that my stop loss is above these little highs here. But I'm going to keep my target where I originally was. So I originally had a 5 pip stop loss. You can see it's at 12.5 pips, which is 2.5 to 1. And, that's quite a bit of movement, so I'm going to leave it where it is. In that little morning visualization I was talking about, if you have a real problem with this, so you get into a trade and it's just sitting there, and because ideally we want, not that this happens, but ideally most of us think in our minds, we get into a trade and it just immediately zooms to our target. That's the ideal scenario, but most of the time it's going to take some time for the price to hit our target. If you really struggle with that, then have a visualization of you taking a trade and just seeing it, chop around for a little bit. It's not making any like moves against us or anything like that, but it's just taking its time getting to the target because we need to be okay with that. Just going to take a measurement here from this swing low to this swing low. It's about 11 pips. And then from this swing low to this one, only about 5 pips. So we do have some slowing and selling momentum at the moment. This could easily accelerate. But if we move up from here, then we have a possible rounded bottom. So we're already starting to think about what could cause this trade. So we started trading right around here. But there's nothing to tell us to get out of this trade yet, and I typically just let them hit my target or stop loss. We have no other news we need to worry about. The only time I'll get out of a trade early is if there's another signal that occurs in the opposite direction. So maybe this goes a little bit lower. We have a little move up, a little move down, start to move up, move down. We'd have a potential rounded bottom there, and that I could actually take. Then I would close out this trade, flip into the other one. That's not based on assumption. I can't assume here that a rounded bottom is going to come and then I get out. The rounded bottom has to actually form, and I'm basically getting out on the trade that would take me in the opposite direction. So there's no assumptions. And right now, like I said, this is moving a little slow, but nothing to indicate that we should get out or anything. Everything's continuing to move to the downside. We had the drop, small move up, we're right back near the low. Yeah, we're consolidating a bit here, but you know, if we break to the downside, that should be good. I will consider the overall movement. We can see we've had very low movement. So on this one, I could reduce my target a little bit and not feel too upset about it because we have not moved a whole lot during this day. About 45 pips the whole day, but you can see this 5, 10, 15. We're limited to about a 15 pip range here, limited to about a 10 pip range here, and then we have this drop 5, 10, 15, 20 pips. So this might be a bit extreme of a target for the price action of the day. But there's no reason for me to get out yet. So even though there's the possibility that if it comes down here and maybe stalls out again, I could get out at still 2-to-1, which is very rare. I did it in the last recording video. I adjusted my target a little bit, but I'm just theorizing at this point because we did have a pretty strong drop, so we'll see how this goes. You can see if we had a similar drop to this, which was on news, this low dropped about 11 pips below. If we go 11 pips down from this low, that'd put us right around here, probably around the 2-to-1 mark. So I'm just saying I'm sticking to the original target for the moment, but be aware that we've had a pretty low movement day. So if we do get down in here and then it starts to turn, I have no problem closing out that trade. Still hanging in there. It was a pretty nice sell-off we had. I wasn't sure if this one had that kind of movement to it. Or movement left just because it was a slow day prior to the news. Okay, so I just closed that one out. Aware that until very recently we haven't had a lot of movement. And where did I get out of that? At 32. So according to this, that was 1.9 to 1. Then we take, at the beginning of the day, you should already know, based on your position size calculator, you punched in your account size, take 1% of that, and then divide your actual profit by 1% of your account. It's unfortunate that I've done 2 videos, and in both of them we've had some pretty low movement, so I've adjusted my target. That I should stress, that almost never happens. Like 9 out of 10 trades, I'll never adjust that target. Going to put this back to where it was originally and just mark my exit there. And at this point we're still in an overall downtrend. We've just made a strong move down. Even though we pop up, we're still in an overall downtrend. The only reason I decided to close this early was because of the lack of movement overall. Earlier in the session, once we had that news hit, we have seen quite a bit more movement come into the market. Now we can look for other possible patterns. We have potential double pumps that could play out. Double pump is a drop, a move back up, a drop back to very near to the low, slightly below or slightly above is okay, within about a pip and a half, and then a move back up to near the swing high that had just occurred, and then a drop. Take our measurements. 5 pips there, 7.7 there. So this drop actually accelerated a little bit compared to this one. That just helps me decide if I'm going to trade a rounded bottom or not. We can see this was a pretty sharp drop, so if we start to edge up, I'm not going to treat that as a rounded bottom, because this side was moving very quickly. So if we start to see some small movements to the upside, that's not enough evidence to indicate that we would just continue plummeting lower. I want to point out something, why I don't adjust my stop losses or my profit targets very often. My target was right here. The price came very close, but by the time I closed that out, instead of getting like 2.3, 2.4R, I end up with 1.9. If you do that on every trade or lots of trades, the point of putting out your reward to risk is to try to get this reward to risk over many trades. If you're not getting it and your reward to risk on actual closed trades ends up being like 1.5 to 1, 2 to 1, then you're not getting that full 2.5 that you're expecting on most trades. If you read my weekly review, typically I am right near that 2.5 mark for my reward to risk when all the trades are closed. That's a huge advantage. And so it's typically better to just let them hit the target unless you do have quite low movement, and we had seen that. No trade possibilities here, really. We've got a really strong snap back down to the bottom. We'd possibly have a snapback. We also have a reversal snapback here, but it hasn't moved up high enough. We still have a longer down wave than an up wave. If this was like a strong V shape and we get a little consolidation here, maybe I would consider trading that, but pretty strong momentum to the downside overall. Yeah, we're seeing this push to the upside, but I'm just holding back. A trading friend of mine used to use the word compelling. There's nothing compelling at the moment. When you got some time, when there's nothing that's going to set up, listen to what's going on in your mind. Are there voices that are wanting you to trade? Are there voices that are scared for you to trade? Are there... just listen to whatever's going on and have a little negotiation. You have your trader at the front of your mind who knows your strategies, knows how to execute these, has trained, researched, and that part of you. So if these other voices are interfering with him or her doing their job, have a little negotiation. Let them know that why you're the best person for this, why, help them, give them some reasons why they don't have to be afraid, why they don't have to feel like they have to jump into trades. So that voice just kind of flutters away. We want to keep as focused as possible, as clear mind as possible. So I like having your trading plan next to you too, because sometimes it's easy to lose your focus for a second, and even if you only trade a few strategies, it's nice to have them right here so that you can quickly refer. So I said nothing's going on, and I can just kind of double check that against my patterns. Is anything actually going on here that could potentially set up a trade? The only possibility, as I discussed, was the snapback. In either case, it's not ideal. If it comes all the way back down here, it's not really ideal because these waves are, the snapback's pretty much as big as the entire last wave. I like to trade patterns within waves as opposed to trading patterns that cover entire waves. So here's a down wave. I like to trade, if a pattern formed here, it's this snapback, even though it did come a long way up, is still within this initial price wave. So we had this down move, we had a pretty long pause here, and then a drop. So this is the last down wave right here, and we've completely erased it pretty much to the upside. We could have moved up to the top of that consolidation there, but this down wave's pretty much been erased, and so we no longer have patterns within price waves. We are forming patterns as price waves. That's usually a sign of choppiness or a market bottom. Take a look over here. We have a drop, small little pattern, like a snapback right here. This is a really tiny one. Usually it takes about 10 minutes. And then we move lower. And then notice this. We have a down wave here, a bigger down wave, and then we start the actual, these are just too big. We're not getting patterns within the price waves anymore. We're just generating this big choppy trading area. Ideally, I like to trade in this type of action where we have a strong move, pattern, and the trend continues. These are getting pretty big. It has nothing to do with that they're 5 pips or 10 pips. It's all relative to the price waves around it. Doesn't mean we don't have trading opportunities in choppiness. Notice here we have a nice rounded bottom. Price comes into a low. Can't make much progress below there. And then we see this little shift to the upside, pull back, higher swing highs, or higher swing lows, higher swing highs. Very subtle, but given the context of this overall low movement, not very strong movement to the downside, we have this shift up. Small pattern at the end of a wave. If we have a move up here, that is a snapback because we have had this strong wave up. We now have a pattern within the wave, a smaller one. So if we get a pause up here, that'd be a potential trade. If we get a pause right here, is that one? 1, 2, 3, 4. Yeah, we could probably be about the 10-minute mark if we drop down here and then had a little pause. I for some reason don't like it though, and I think it's because of this. We're at a higher swing low. So not a super strong pattern, so I don't think I'd trade the downside one. I'll have to see, how the next few bars play out, see if anything could possibly change my mind on that. The upside breakout from here looks a little bit better to me because we had this, we were in the downtrend, we've had this nice move to the upside, created that higher swing low, then we'll have another one if we push up into here, and then if we get a little pause here, you get the breakout above this level, these levels. All these people who went short in here likely get trapped. As you can see, there's probably lots of people who had their initial stop loss up where I had mine, either just above these swing highs or just above these swing highs here. But we'll see how this plays out. That's not a forecast, that's just what if that happened, that would present a trading opportunity for me, but I have no idea if that will happen or not, and I don't care. I just want to make sure I'm not missing anything by not taking that short. So we do have a little snap back here. 2, 3, 4, 5, 6. We're back at the low here. We still need 2 price bars to move sideways, so we've dropped to the low, so we'd still need to wait another 2 minutes or so for this to even form a valid trade. But as I said, I don't really like it. Because snapbacks typically are a move up. We're in an overall downtrend, snap up, move right back to the low. This one's had this strong move here to the upside in between. So we'll see if it even sets up. Doesn't look like it's going to set up if it's continuing to drop below that level. Keep in mind, on my trades, I am looking for a 2.5 to 1 reward to risk. So just because I don't take this doesn't mean that I don't think this could drop. It's that, even if I'm getting short, if this did set up, I need that to drop down here. Who knows if that would happen. Since it's not a great pattern, I don't think it's likely. So we know this downtrend has potentially lost some steam already, at least compared to what it was doing before, because of this rally up. Higher swing low, we haven't made much progress here. That could definitely change if we get the sell-off. But as it stands right now, if we start to transition back to the upside, we have a potential rounded bottom. That's very hypothetical at this point because we need a move up, a higher swing low, or a higher swing high here. This could be a sort of snapback here because we are getting the 2-bar pause. We're just slightly below that swing low. Yeah, we're just starting to see these bigger waves in here now, so not as big of a fan of that. Sorry about talking quiet. There's people sleeping, so I try to keep my voice down a little bit for these videos in the morning. So even if we had wanted to trade this snapback, it did not trigger because we have 2 sideways bars. There's no drop below that. Instead we move to the upside. I think lots of people think that day trading is exciting and that you're constantly over a keyboard just ready to hammer keys. And I have traded that way. When I worked at the firm, I made many hundreds of trades a day. But when you're trading on your own and you have commissions and you're going through a retail broker, that's not going to be your best approach. It's typically going to be isolate your trade for 1 or 2 hours, isolate your really high probability opportunities. Some days you'll see me make about 6 trades in that time frame. Usually it's about 3, 4. And the last recording, I think I made 2 trades. Today we have 1. We're about 45 minutes into trading, so 1 trade. If you were still in this trade, it hasn't hit our stop loss. So we would still potentially be in this trade. After these sorts of points where, it's tried to get close a couple times, if you didn't get out here and, it got close again, I would definitely be considering closing that out. But there are often I'll hold a trade for half an hour. If there's not a lot of movement, that's what you gotta do. So we are back up near this swing high. So back in this scenario, possible rounded bottom. Not yet, but soon, possibly. As you're trading, keep being aware of any voices that pop into your head. Your mind should be very clear. Not a lot of chatter going on. Trading's just, like taking a stroll in the park. Nothing There's nothing sensational going on. Whereas my own mind, when I started trading, and from what I hear from other people, they just have a whole bunch going on in their mind. And ideally, we know what our patterns are. It's like driving a car. We know what our patterns are, and we're just waiting for them to appear. When we start to get, some patterns that look similar, we just run it through our mind, run it through our little checklist. Does this fit? But it's all very if you have a lot going on in your mind and you're not sort of clearing that stuff away, it becomes a lot harder to see patterns clearly. It becomes a lot easier to have one of those moments where you're just sitting here and all of a sudden, it's moving, and you hit your buy button. Like right there, you have a little flick, and it's because you've let those other voices, those ones that are the gamblers, the ones that are the ones that want action, the ones that, maybe not the ones that are afraid to trade, those ones are more, the one that's afraid to trade is more likely to, when a pattern does develop, I don't really like that, you're not going to take that one, and you're going to end up staying out of that trade. So trading is actually a mostly psychological endeavor, because everything that's coming in gets filtered through our beliefs, our values, how we think, how we interpret the world, and then on top of that, any little voice we happen to have going on in our head is going to affect how we see the price action and whether we're going to take trades or not. So we can see that got pretty much right to that high. So we can definitely see big down move, tiny down move. Nice little slowing of momentum there. Shift back to the upside. We may get a little further drop here, but I'm going to measure this out. 3.4, add a little bit, so we're going to end up at about a 4 pip stop loss. Keep in mind that's a 10 pip target. 10 pips would take us back up into this area. It'd be nice to have a little bit smaller stop loss. Not in yet, I'm just doing my position sizing. What would be nice is if we did get, now I'm not in a trade yet because ideally I'd like to see if we get a little bit smaller stop loss. So if we can form some sort of pattern where anything under 4 pips is nice. The rounded bottom is also typically, we wait for like a fourth point. Here we have a 1 low, 2 lows, a third low, and we're starting to see that transition. But at this point, if we do break above that, I will have to take that trade because it is valid. But if we get another little one down here, that'd be even better. Or up here. Let's just review our overall price action. Strong downtrend. We've really seen that level off. We had a little bit of a slowing here in the downside momentum. We had a push up which matches this drop. In on that. $379. Again, we've moved not very much, less than 10 pips in the last hour. About 11 pips. I'm trying to make a 10 pip target. So this is definitely going to require some sizable moves. So I'm in the same position I was here. If, we get up close to this area, I think I'm going to take my profit on a day like this because since I started trading, we don't have a lot of movement. Stop loss looks good. It's just about between 1 pip or so, 0.2 pips below this swing low. Given the low movement, there wasn't a lot of urgency to get into this trade. So there was the possibility to wait for, if you notice, we're starting to, it's dropping now, but we did have this little bit smaller consolidation, so there was that opportunity to get in if this breaks back above it. So in slow movement, the price action will often give us another entry point. But that's also why I didn't get in right here on this bar. I was just waiting for a bit better opportunity. Dropped below the low and then went up again. So to me, that was a little bit of extra evidence that said, yeah, let's get into this one now. We are forming a little bit higher consolidation now. See if it breaks out or not. But notice we had this news, and then since then we've done pretty much nothing. So that's something we want to keep in mind. This was also a valid entry. This little consolidation right here. So I entered on this whole big one. This one would have given me a little bit less. So I'm just going to check on my chart what the low of that is. 34.8. So I could have shaved off about 0.7 pips there. That would have brought my profit target down. Instead of trying to make 10 pips, I only have to make 8.3. So a little patience would have paid off here, especially because we don't have super compelling movement. pretty slow. So this says 2.5. My original stop loss though was based on 4 pips. Now we're at 3.3. So if this does hit my target, it's not going to be a 2.5 reward to risk. It'll probably end up being like 2.4 or something, or 2.3, because I've actually, let's see what it'll be. Yeah, I'll actually end up being just over 2. But in this kind of movement, I'm okay with that. This valid entry occurred after mine, so I have no problem putting my stop loss there, because we could have easily taken this trade instead, in which case this is where our stop loss would be. And that's where our target would have been. So the only thing that ends up a little bit screwed up is my position size is a little bit smaller than ideally it should be. Because I was using a 4 pip stop loss on this entry, and turned out we only needed 3.3. So my position size was based on a bigger stop loss, which will of course make it smaller. You can see when we start to get these transitions into new trends, you typically have a scramble for the exits, as all these people who were short now realize they may not be in a great position. If you were still in this trade because it never hit our stop loss or our target, at this point, since you have a new trade going in an opposite direction, you would have closed this out, so you would have ended up with about maybe 1 hour profit or something. So that's important to note, that this, even though it didn't hit our profit target or our stop loss, the trade still worked out. We've just made a higher swing high, we've made higher swing highs, made a higher swing high above here, so the little pullback, not a major concern at this point. We know that because of my position size, I'm already a little less than a 2-to-1 reward to risk. This profit target's just above this area, or just below this area here. Ideally it'd be nice if it was just at the bottom of this little congestion area. Actually right around where it just hit. We'll see if we get another upward push. No other patterns that are setting up that could set up like right away. People always ask me if I look at anything else while I'm trading, longer term, time frames, bigger patterns. Nope. You can. There's nothing wrong with that. You can develop your strategy around that. I've developed my strategies around simply trading what I see on the 1 minute chart. So we have a bit of a double pump here. See a move up. These highs came within about a pip and a half. Forming another, so let's say this has started to move off its high. This would form another valid pattern. I'm not going to take it just because we have a little bit lower movement today. But once this moves up and it's a valid entry, then we have the opportunity to move our stop loss up to below here, because this would have been, if we weren't in this trade, we would have taken this one. This is where our stop loss would have been. But at the moment, this isn't a really beautiful double pump, kind of hard to trade off of. And I say that because we had this drop, the move up. This drop and recovery happened all in one bar, so we had nothing really to go off of to get into a trade. If watching this makes you anxious, note why. What's going on in your head? What's the voice afraid of? Are they afraid of losing profits we don't have? Then potentially that voice doesn't understand our trading system, that we are allowed to have losses. It's already factored in. When you go through and add up all your profits and losses, you'll see there are lots of losses. But by waiting for the bigger rewards, we end up with a profit. So all we're waiting for is, at the end of the week to add them all up and say, yep, we made our profit. Haven't quite broken above that level, getting there. At this point, we know we've broken above that level, so we could move our stop loss up below here. Because at this point, we do have a double pump, because we at least had a price bar to go off of. I did not get out of that. It looks like I did, but I did not. At least not with my broker. The high on my broker was 45.7. The high here, 46.1. My order is at 46.2, so even on this broker I wouldn't have. Each broker is its own market in a sense, because it is its own traders, it has its own market makers, its own banks that are connected into it, and so prices are different across brokers. So I'm allowed to add on if I'm in a trade and another trade comes up while I'm in it in the same direction. I'm allowed to add. This time I opted not to. So because even though we had, some nice pops out of here, we're not like exploding higher. This was a, 5 pip move maybe. Yeah, about 5 pips. So it's not like we're running hard to the upside. Here we had a breakout, tiny little consolidation, then the move up. Here we're getting breakout, little consolidation. We'll see if we get another thrust up enough to get me out. Then I'm out. So as mentioned, that one's also going to be around the 2.075. And that's because we altered this a little bit. Where this was originally 4. We're getting close to that original 2.5 to 1. But in the low movement, I don't mind being a little bit conservative. And I know you may be saying, low movement, what do you mean? We just had this huge drop. But while I've been trading, like I pointed out, we haven't done much. Maybe 15 pips of movement since I started trading, 16 pips of movement since I started trading. So we gotta look at what's happening in real time now. What's the price action telling us now? It's still slow, it's choppy, it's not having big price moves. These are all like 5, 6, 7 pip moves. These are not these types of move that we were seeing where we move 10 pips very quickly. This is move 5 pips, chop, move 5 pips, chop, move 5 pips, chop. Just make sure these are back where they were. Just drawing a line there where my stop loss was originally. We can also see what will make me more cautious is how actual trades have gone. So we can see I got out for 1.9R, but this would have never hit my 2.5 to 1 target. And it's looking like my original one may not either before a big pullback. $47.9. My broker would have come within about half a pip of that original target. Same with this one. The original target was at 1.20479, and this one got up to, if you look along the top of the screen there, 1.20477. So it would have just missed my original target. But we got out of that. Just gonna pause the recording for a moment since it doesn't look like we're gonna have any other setups here at the moment. We do have a possible rounded top coming in. You can see very slow movement to the upside, but it'll probably take a few minutes to set up, so I'll just pause for a moment. Okay. So we were starting to see this, really slow movement to the upside. Bigger drop. We did get 2 candles here. There was a possible short there, but again, just because we're not seeing a ton of movement, I'm just sitting back seeing what happens. And again, just because this went in our favor a little bit doesn't really mean anything. If you had gotten in here, there's that instant, if sometimes in your mind you think, oh, I should have gotten in there, and then you try to jump in on a pullback. It's not whether it moves in our favor a little bit, it's can it hit a 2.5 to 1 target. Looking at close to a 4 pip stop loss there, so that price has to move 10 pips down. That's all the way back to the bottom to hit a 2.5 to 1. Actually, probably not quite 4 pips if we use this bar. Yeah, it could be with a bit of slippage. 3.5 to 4 pips. Obviously, the smaller those price bars are that can give us that smaller stop loss, the better. We don't force the smaller stop loss. It's just what the market gives us. And if we have lots of movement and sometimes the market gives us like a 2 pip stop loss, that's the time when we want to consider going for a bigger reward to risk. Because, if usually your stop loss is 5 pips and you can still make 12.5, the market's moving a lot, and you get a 2 pip stop loss, try to make that 10, 12 pips and you'll have a 5, 6 to 1 reward to risk. That's 5 or 6% to your account on one trade. let's just see. If we had taken that. Alright, so we need a big drop. Back down below that original stop loss. So when you're looking at a rounded top or a rounded bottom, if the trend starts going the other way, what's your profit potential? As we can see, we're moving in a pretty choppy fashion here. So yeah, is it gonna make it all the way back to the bottom? Well, we know that this trend failed down here, so our target would probably have to be above these lows here. Up in this area is probably not too bad, but it seems like a bit of a stretch because we're not moving a lot. So to have to take a 10 pip profit target or even an 8 pip profit target when we've only moved 15 pips, the price has to move 50% of what it's moved already just to hit your target. It's not horrible, it just means that the odds are less in your favor. If the price is moving 60, 70 pips while you're trading, $60 or $70 pips while you're trading, and you're trying to make a 10 pip target, that's the price only has to move 15% of what it's been moving already. So this is getting pretty compact. We want to be hyper alert of the fact we don't have a lot of movement. Also, by staying out of this one here, we can see there was not a lot of downside push on this initial thrust here. Doesn't mean it can't accelerate, but it's just overall not super compelling to me. And we'll see if I eventually, or if it was a mistake to stay out, because this was a technically valid trade here. We'd made a lower swing low. This was our kind of last push up here. So we made a lower swing low than this one. We were right about level with this swing low. So, and then the move up, pause, drop. So this was a technically valid entry. It's just the context, everything I didn't like in terms of just we haven't had a lot of movement. And again, the target for it would have been down here in this area. Still a long way from that. We have a possible double pump here. Drop, move up, drop back to the low, move back to the high. These are all very symmetric, meaning the highs and lows are symmetrical, horizontal. But again, it's that case of we need a small stop loss to make it worth our while. Typically you can enter when the price makes the transition, so if it dropped below this green bar, then of course that could change as the price progresses, but we're still 3.5 pips, a tiny bit for the spread accounting for that. You're up in that 3.5, 4 pip. We need a 10 pip down move. That's just too much. If we get a little bit smaller one up here, it's a possibility. But if it keeps moving up, that'll nullify the double pump. Again, this bar looks too big to me too. It's getting better. Probably about a 3 pip stop loss on that. It's about a 7.5 pip downside. We're still way down here. So I'll keep recording for another few minutes and then I'll call it a day for the video since we don't have a ton of movement and captured some good profit in some frankly pretty this was okay over here, and this was a good trade here. Basically the only 2 that I see, because anything else you tried to trade would have not gone anywhere. We had this possibility, and it's just not the rounded top. But just like I said, conditions not great for it. We have a double pump here. Again, conditions just not great for it unless we get a really tight consolidation. And again, it's just not overly compelling. These are not big price moves by any stretch. So it's more just chop, 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 like what we've been seeing. So that double pump is looking a little better there. At least it's, we can start to see this little smaller consolidation. There you're into like a 2.5 pip stop loss. At 2.5, we need about 6.5 pips of downside movement. That would take us right about to here. So that definitely seems more feasible, but to be honest, yeah, it's just, we've just done nothing. So to expect that the price is going to just continue dropping or moving up at this point, it's all just so choppy that I'd rather just stay out and keep my profits and money for another day. And we don't have, like I said here, this isn't a strong down, like it's a 1 bar, but it barely makes any progress below this prior swing low. So it's not like we're in a strong downtrend where we really want to get into this short. There's not a lot of evidence of strong movement. We've moved below these swing lows a little bit, but hesitant. It's not like this where it's drop, pause, collapse, pause, collapse. Now we can start to see a little shift to the upside. So good we stayed out of that one. And I don't by that point, we want that high within about a pip and a half. So this was getting a little bit outside what our double pump would be. We want these highs very close together within about a pip and a half. So we were starting to push beyond that once we got this little peak up here. So this is not a skip trade or anything. Conditions were just not good for taking the trade. Yeah, so it looks like we're in drift mode. It's about 8 o'clock. Put in about an hour and a half of trading. And I may still watch it on my own for a bit, but not. Let's put in the last note. Because we want to trade a double pump in a trend, preferably a strong trend. And while we have seen a bit of downside movement, not ideal. And we'll call that a day for $3.975R. I'll take that on a day like this. Just writing down what each of the strategies produced. And no mistakes today. This, I did get in a little bit early, I guess, here. But we had seen that little false breakout to the downside. Another consolidation just happened to occur right after it. So once the price started to move up, I just used that consolidation because it gave me a little bit tighter target, a little bit tighter stop loss. Did result in losing out on a little bit of R. But given the context today, I think that was good. And that's it. So until next time, happy trading.